What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a very bullish day across all of the indices. Are we about to break out to new all-time highs or was today just one giant bull trap? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did see SPY going up over 1% today and we did close back above that 20 simple moving average right around 416. So that is a bullish breakout above that 20 simple and we did get a price action close above that level. So we still need to see some follow through there going into tomorrow and we need to see another price action close back above that level. You could see the moving averages are starting to curl back up and if they cross back above that 20 simple moving average, we will have a full bull trend. Intraday, we did find resistance at that 420 level and if we break back above 420, that's also going to be another bullish breakout and it will start looking like we're going to the all-time highs in SPY. So above 420, we'll be looking for price targets at 423 and right around 429 to 430. Now remember, don't look ahead. We still need to break above 420 and we still need to get another price action close back above this 20 simple moving average. This could very easily still be a bull trap where we still have this lower high and we still could be going down for another leg lower to close the gap at 400. So the critical lines in the sand that you need to watch for support are the 20 simple moving average at 416 and the $412 support level. If we start breaking down below either of those levels, those are early warning signs that we could be coming down to close the gap at $400. So don't get trapped in this bullish breakout because it is on very low volume and it is definitely something that could be tricky because it is going to look like the market's ready to break out from here. So tread lightly in this area and remember that your critical breakout level was that close above 416. So a follow through of that level is starting to look more bullish. We're going to start getting the bullish trend back and we could start seeing SPY marching towards 430. So that is in the cards, but remember, if we start breaking back below 416 and fail to retest support at 412, then we're very likely going into a more bearish scenario. On the NASDAQ 100 QQQs, we went up 1.68% today and closed right at that resistance level at 332.5. We also closed back above the 20 simple moving average, which is right above 330, which is another bullish breakout, and we definitely see the moving averages are starting to break back up to the bull side. So on the QQQs, another price action close back above 330 tomorrow would be another bullish breakthrough and we would start seeing a bullish trend building back up in the QQQs. Although we do have critical resistance right at where we closed at 332.5 and right around 334.6. If we start breaking back above 334.6, it's going to be looking a lot more bullish for the QQQs and we will have price targets above at 339 and right around the 343 previous all-time high. So the critical downside support levels for the QQQs are 330 and 326.76. Below 326, the QQQs are likely going to close the gap below at 323 and could retest support at 322. Below 322, the QQQs would be going back into a bear trend and we could see prices all the way down in the low 300s. So right now the QQQs are definitely looking a lot more bullish because the price action is back to closing above all the moving averages. So look for follow through on the QQQs tomorrow and let's see if we can get another price action close above $330. On the Dow Jones ETF, we went up 0.56% today. And again, we closed above all the moving averages and we're starting to see the bull trend returning. We have a huge gap above on the Dow Jones to close right around 347.6. And remember that was right around the previous all-time high, right around 348. So upside price targets will be the gap fill above at 348. And don't forget, we still have the chance that this is a bull trap because we still have a lower high situation. Right now, as long as we're above about 341.7, this is bullish price action and the bullish trend is definitely returning. So above 341.7, we're bullish, and below there, we're looking for a retest of about 337 and the 50 EMA at 336. If the Dow Jones were to break below the 50 EMA, you're looking for the gap close right around 331.6. On the Russell 2000, we went up 0.65% today and failed to break and close above the 20 simple moving average. On the rest of the indices, we did see a break above the 20 simple moving average, but on the Russell 2000, we failed to break above. We did close above the 50 EMA right around 220.8, but we still have critical resistance just above at 222. So if the Russell 2000 can break back above 222, we could be starting to march back up towards 227. So the critical downside support is still right around 220, and a breakdown below that level means we could be coming back down to 215. A break below the 50 EMA yet again would be a bearish breakdown, and that would show that the Russell 2000 is losing steam and it's starting to get down into a bearish trend. As you can tell from the moving averages, the Russell 2000 is closer to a bear trend than it is a bull trend. On the ARKK ETF, we went up 2.73% on very, very low volume. So there's not a lot of buying behind this move, and we did get into that resistance level right around 109. Remember that on ARKK, we are already in a bear market, and these pops off of support are not necessarily to be trusted because as they come into resistance, we're going to see more short sellers coming in and driving the price lower. So right now you can see we went up on very low volume and we're right at a critical resistance level right around 109. The 20 simple moving average is just above at 110. And if we do break above those levels, we are likely going to retest the 50 EMA at resistance at 116. So be careful here, don't get overly bullish because we still have a bear trend and we still have lower highs and lower lows, and we're right at a resistance level at 109. We will have support right around 106, and if that level breaks down, we're likely coming back down to retest 97. On the VIX, which is our fear indicator, we dropped over 7% today, and the VIX is coming into that support level right around 18.2. The VIX did close below 20, which is a bullish sign because remember the VIX is a measure of fear, and if fear is going lower, we're more likely going to see all-time highs. However, as long as the VIX is still above the support level at 18.2, we could still see a bounce from here and start heading higher. So be cautious here, but it is looking like the VIX is going lower, which is a bullish indication. If the VIX bounces off of 18.2 and gets back into the 20s, that would be an early warning sign that we could be going lower and we're not going to new all-time highs. So watch the VIX off this 18.2 level and watch resistance right around 20. On gold, we're still hanging out above that resistance breakout level right around 1876, and it does look like we could be heading higher to the next price target at 1923. Look for support right around 1876, and if gold breaks down, it could be coming all the way back down to about 1830. On silver, we still have that bull trend, and the price action is still holding over the 5 EMA, and we're still holding up above that support level around 27.6. We still need to get a breakout above the resistance trend line at $28 to get to our next price target at 29. So look for support at 27.6 and that 20 simple at 27.2 with upside resistance at $28 and our price target at 29. On Bitcoin, we're currently up over 11% and Bitcoin is coming right into this resistance level right around $39,000. It did look like Bitcoin double bottomed off of that low $31,000 price target, and it does look like Bitcoin is going to try to climb from here. So critical resistance levels to watch are going to be 39,000, 43,000, and 47,000. Remember that Bitcoin is in a bear trend and it's definitely looking like it wants to go into a bear market. So if any of these resistance levels hold up and we see Bitcoin getting rejected, don't forget we could be coming back down to $30,000 and $27,000. Those are the key support levels to watch right now if any of these resistance levels do hold up and Bitcoin fails to break through. But keep in mind, it does look like we did double bottom and it does look more bullish than bearish for the short term. Keep that in mind, it's the short term because we do have a bear trend. Just like on ARKK, we're looking for people to try to sell at resistance and drive it lower. So be patient on Bitcoin and don't expect to be getting into Bitcoin now and seeing new all-time highs next week. It's just not going to happen that quickly. And a sell-off this drastic is going to take a lot of repairing on the technicals to go back into a bull trend. On Amazon stock, we went up 1.31% today, and we're still closing below that 50 EMA resistance level at 32.53. So watch critical resistance at 32.50, the 20 simple moving average at 32.87, and the resistance breakout level right around 33.50. Critical downside support is still 32.09 and 31.38, and it does look like Amazon is consolidating, getting ready for a big move in either direction. On Tesla stock, we went up 4.4% today, and Tesla closed right on top of that 13 EMA right around 606. There is a resistance level just above about 626, and that 20 simple moving average is right around 631. So Tesla is in a bear market, and it's forming lower highs and lower lows with a full bear trend. So watch Tesla very closely because it could likely get rejected off of resistance and come back down to retest support. Watch support levels at 594 and 557. And remember, if Tesla starts closing below 557, you want to get out because it could be going all the way back down to the 400s. But right now, this 557 level is still a very strong support level. And as long as it's holding up, you can still trade Tesla long, knowing that you need to get out if it starts closing below 557. On Apple stock, we went up 1.33% today, and Apple did find resistance at the 50 EMA at that resistance level at 128. You could see the 20 simple moving average is also in that area, so you can definitely see some downside momentum and trending in Apple. And if that 20 simple moving average crosses below the 50 EMA, Apple will be in a full bear trend. Apple is a market moving stock, so you don't want to see it in a bear trend because it means the rest of the market is likely going lower. So watch that critical resistance level at 128 because you need to see Apple breaking out above that level very soon, or it could be coming all the way back down to about 119. You will have critical support levels before then at 126 and 123, but in a bear trend, it's more likely Apple's going to get rejected at resistance and start heading down towards the next support leg lower. On the financial sector, we went up about 0.5% today, and we're still closing over top of the 5 EMA and still holding on to the bull trend. The industrial sector went up about 0.6% today, and it's back above all of the moving averages, and the industrial sector does look like it could be trying to build up a bullish trend yet again. On the healthcare sector, we went up 0.1% today, and we're still closing over top of the 5 EMA and still holding on to the strong bull trend. The energy sector went up 1% today, closed back above the 5 EMA, and it's still holding on to the bullish trend. We can also see the energy sector did find support off that positive sloping 20 simple moving average. So going back to the S&P 500, you can still see that we have bullish sectors and we still see the VIX heading lower. Overall, these are bullish indications, but we're still dealing with a lower high situation and we still don't have a full bull trend. So we need to see follow through going into tomorrow because this is still a possibility that this was all just one giant bull trap. We'll know with the confirmation of the price action tomorrow if we continue to close back above these 20 simple moving averages and we start to build up a bullish trend. So we're very close to getting the bullish validation or the bearish validation on where the price action is going to go and where the trend is going to be set. So watch the critical resistance and support levels closely and make sure you're being objective because if the price action is breaking out bullish, you want to remain bullish. If the price action starts breaking down and breaking below critical support levels, that does mean that this bull rally could be rolling over and we could start to see weakness in this market. So as long as SPY is trading below all-time highs and we just are one day above that 20 simple moving average, it's not the time to be full bull just yet because this could still be a bull trap. So be cautious and be patient, and we're getting very close to knowing which direction this market's ready to go. Also remember, on the Stocks Channel Discord, I'm doing intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm also bringing new trade ideas to you weekly to help you crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.